Hello, everyone. Welcome to today's technical analysis lesson. Now, I think one of the big problems with lessons is that people refer to things that happened into the past. Oh, I said this was going to happen, and look, I was right. They don't show you the stuff that they were wrong about. So, what I want to do is lessons in real time because that's how you can really learn. Now, one of the most important things you need to understand about markets is that there are certain price levels that are more important than others. That's just the way it is, all right? Sometimes we know why a level is important, sometimes we don't, but the good thing is that we don't need to because we just can see them and we can trade around them. Now, here's square, and look at this, the $89 level. This is what's called resistance up here, all right? Notice how it got to 89 back in May, and then again in August, and then again in February, and each time it went lower. When a market's moving higher, there's not enough sellers or sell orders around to fill up all of the demand or buy orders. So the buyers are forced to pay higher prices. And this forces the stock or the market or whatever we're looking at into an uptrend. When we get to resistance level, well, the tide turns. At a resistance level, there's a lot of investors who are trying to sell. There's more supply than demand. So this is why markets stop going up when they get to resistance. When a market's going lower, it's for the opposite reason, is there's not enough demand to absorb all of the supply, or demand, meaning buy orders, absorb all the supply, meaning sell orders. When we get to what we call a support level, the tide there turns, and because at a support level, there's a lot of buyers or a lot of investors who are looking to buy at or close to that same price. So there's more demand than supply at a support level. Now, the fact that these things can stay intact for a long time is what we call market memory. And this is a good thing to know, right? This is, you got to know where these levels are if you want to be a successful trader. I think it's really just that simple. Say, just hypothetically, you said to yourself, oh, we got down to this support level and I'm going to buy. I'm going to buy Square around, and just say you paid $62 a share. And you tell yourself, all right, I'm going to sell it if it gets to 95. Well, if you do that, you're just guessing. Okay, you have to let the market tell you what to do. The market is never wrong. Okay, if you're just saying, oh, I'm going to just sell it at this arbitrary price, you're just guessing. However, had you looked into the past and saw, oh, gee, there was resistance around 89, there's a good chance there could be resistance there again. So instead of trying to sell it at 95, I'm going to put my sell order at, say, 88. And you would have sold it, and it would have went lower, so you would have had a nice trade. Now, it's not as good as selling it at 95, but it's better than missing it. And the same thing on the way down. If something's going lower, you can tell yourself, I want to buy this, but I don't know where. Well, this level here, say it's going down here, oh, this has been support. So there's a good chance there's support there again. Now, the astute observer, and I know you are, that's why you're here, we'll notice that we got another phenomenon here. A level that was support can convert into resistance, and a level that was resistance can convert into support. See how we had resistance there, and then we have support over here. Resistance turns into support because of seller's remorse. There are people who sold here who regret doing so when the price goes higher, and they tell themselves they're going to buy their shares back. But they're only going to do that if they can get them at the same price they sold them at. So if we have enough remorseful sellers placing buy orders at the level that was resistance, it can turn into support. Here we have, Here we have support turning into resistance, okay? Resistance here, resistance here, resistance here. This is because of buyer's remorse. There are people who bought here, and when the price went lower, a lot of them regret doing so. So they tell themselves they're going to sell and get out at break even if they can. So when it gets back up to their price, if there's enough remorseful buyers placing sell orders at the level that was support, it can convert into resistance. So we see this a lot on charts. Support becomes resistance, resistance becomes support. Now I want to look at a closer up. This is a 1 year. I'm going to look at the year to date. Now, we gap down, and where did we find support? At the level that was support before, 60. A gap means we close at one price and the next day we open at another price, and there's no trading in between here. Now, because there's no trading, guess what could possibly happen? Well, one of the reasons why we get resistance is because we have remorseful buyers placing sell orders. When we make a move like this, it never trades at these price levels. So if it doesn't trade there, well, there's not going to be anyone who's a remorseful buyer trying to sell. So there's a good chance that this thing gets right back up quick, because if buyers come in here, there's not going to be a lot of sellers around. They're going to have to be willing to pay higher prices, and that could force an uptrend. So you've probably heard the expression gaps refill, and that's why. If you understand them, that when you look at a chart, you're looking at psychology and supply and demand, it's easy to understand why a gap would refill. Again, if you have no people buying in here because it didn't trade here, you're just not going to have remorseful buyers placing sell orders. So the buyers might come into the market and say, oh, it's trading at 62.81, that's where I'm going to buy it. But it turns out that there might not be any sellers around up until you get to, say, 63 or maybe 64 or 65. So this forces an uptrend. When something is trading sideways like this, just the same dynamics don't apply. So gaps refill. Support levels are where there's more demand than resistance. More demand than supply. Resistance levels are where there's more supply than demand. Support can convert into resistance because of buyer's remorse, and resistance can convert into support because of seller's remorse. All right, that's it, everybody. Thank you, and make sure you check back, because we do a daily lesson Monday through Friday. Well, at least 5 a week. And please sign up for our YouTube page here, and I will see you soon. Thank you, everybody.